JB here. Hope everyone's doing outstanding. Friday, March 7th, 3:15 on this fine afternoon. Talk quick about the market, some names I'm looking at, go from there. S&P, quite a reversal this afternoon. About the noon hour, right when Powell started to do his remarks, about 12:30. SPY was at 565, and then boom, a $10 reversal over the past 2 hours. And you'll see back at a 575. I was on the rant this morning around the same whatever it was, 9:05 a.m. and we're at 575 on the SPY. So for all intents and purposes, nothing has changed with the market. But it was another rocky day, another bumpy day. Opened higher, well, not opened, uh, tried to find a bit at the open all the way up to 576, and then just melted all the way into the noon hour. Not much in the way of catalyst. POTUS came and did some remarks at the Oval Office. Nothing really of substance there. And then it was Powell, and I don't even know if Powell was responsible for the move higher, but um, he came on at 12:30, and that's where the market hit its bottom. 565, 63 on the SPY was 12:20 was it. So I mean, he pretty much just reiterated, said the sum of parts. I think right what he say. They're in the props, that the White House in process of implementing policy changes in trade, immigration, fiscal policy, and regulation. It is a net effect of these changes that will matter the most to the economy for past monetary policy. And pretty much, he just kind of reiterated he's not going to, the Fed's not going to do much on one data point or one month. And he did say the path, or at least it looks like there's moderation in consumer spending. So I guess that's all good. Pulling off the band-aid kind of gets that stuff out of the way. And then the Fed meeting's in a week and a half. I think it's March 18th. So uh, no Fed cut is expected, and then it's just a matter of what with the commentaries there. The issue with the Fed meeting on March is that there's not another Fed meeting till the start of May, and so will be interesting to see how that plays out. Last time we had that large distance between the Fed meetings. I think it was from the summer to September when they did the first rate cut, and they were more aggressive. They did that half percent rate cut to start it off. Probably would have been a quarter percent if there was a Fed meeting in between that. But who knows if that plays much. Back in the day with Bernanke and Yellen, I think Bernanke used to do the Fed. I forget who did. Someone used to do press conferences. I don't know if it was Ben Bernanke, and they used to do it like every other Fed meeting, and then it became every third Fed meeting, and then there was only like press conferences, um, like once or twice a year on the Fed meetings. Now there's someone changed it back to where there's press conference after during every Fed meeting. So which is good, right? More transparency, less room for surprise. All right, so that's right. We'll see what the market's going to play, how things are going to go. I was saying I like to see a high volume capitulation kind of move where we have a huge spike on the VIX, big pull, a candle, maybe 5-10 minute big sell off, and then a reversal, and then that starts to bounce. I wouldn't call today's move that kind of capitulation move, and maybe we don't need it, but you take a look at the VIX, it's been melting higher, slow and steady, right? So to me, it's like the fear index, more or less, and you would think that there'd be more fluctuations, and there hasn't been. So we'll see how things play out here. But I also posted a chart in the chat room. If you take a look at the last this week, it's like we just need to break over that five. It's a downtrend, right? We just got to get over 576, and we're right at 576 now, and break out of this downtrend. Um, but a couple things out of the way. We broke under the 200-day moving average on the SPY for a little bit and bounced. So you could make it on the daily chart. It held. And then as long as that continues, maybe we could be a little optimistic. But who knows if this is just a low relief bounce. I continue to be cautious. I'll continue to say I don't have my bear suit on per se. I'm open to both sides. If you've traded in volatile markets, huge moving markets over the years, some of the crazier moves, 2013, 2014, 2008, 2009, obviously the COVID times, it's you can be in a position where you're in puts and they're looking great, especially on a Friday, and then you have these huge reversals. You can also have the other way around where you're playing for a bounce, call position looking great, and you have some reversal. So I mean, there's two things, and I keep saying small becomes big very quickly, big becomes small, and the other is you got to be open to these bounces. The market, the S&P, we might go down to 540 on the SPY next week, but it doesn't mean we can't have a $10 reversal, right? So until the market finds a bottom, I think there's going to be both sides to trade, and I'm just going to be open to it. And also, when we have swings like this, it's hard for me to have conviction to trade names like I did for a while, especially in November, December, and the start of this year, where I look at names and say, "Wow, Teladoc or the Redfins or the you know the TripAdvisors and things like that." It's tough for me to wrap my head around getting convicted in upside until we get a little, I wouldn't say the green signal or all clear signal, but until maybe these swings kind of settle down and then we can start looking forward. But for now, crazy week, and we'll see how things play out uh, into the end of the day here. But decent bounce again, similar to what we had last Friday. So I keep saying buck the trend. We bucked the Monday and Friday sell-off trend, which had been weak sessions for the market on both those days. So that's a good sign, pending any crazy pullback here into the end of the day. Um, and then take a look at the long-term chart. Always trying to keep things in context. Only we got to 565. We didn't get to that 563 October low on the SPY, but it just put it in perspective. It's only a couple months ago we were at these levels. It's not like we're starting to break multi-year support. So kind of helps with things, and we'll see how things play out. And then I have great little historical chart in Market Watch this morning around the incidences of the S&P breaking under its 200-day moving average since the financial crisis. And we have 3, 6, 9, 12, so 15 instances. And of those 15 instances, if you bought the day that the market broke the 200-day moving average, a year later, 14 of those 15 times you were in the green on an average of 17%. So that's pretty good odds, right? Was that, I mean, that's pretty much what 92% probability that there's a green return within a year. So who knows? There's always outliers. Nothing's ever certain, guaranteed. All right, so that's the overall market. So I remain cautiously, I would say optimistic, but just maybe we finally got out all the bad mojo out of the market, and maybe we can start working on finding a floor, and then maybe we can start to look to bounce next week. But I'm not convicted enough to start adding long-term calls just yet. So that's the overall market. So this morning, I mean, Goldman Spectacular, I got those puts as a hedge earlier in the week. Goldman Sachs ran all the way up to 593. I held them. I put it in the on the chat. I said I'm going to hold these as a hedge. I didn't think it would trade down into the 540s. It did. Got all the way down to 544, right at the noon hour before the reversal. Thankful locked some out for 100% on the way down, a little over that, and then locked the rest out for some profits. So lucky to get out of those. And then with the market kind of falling, I had the JP Morgan 245 puts at the start of the week. Those paid handsomely. But even if I had held those the rest of the week, the timing would have had to been perfect to lock the highs on that. And I mean, the timing today, I mean, JP Morgan went all the way down to 239 today. So those would be $6. But I would have had to have ridden out all those ups and downs. But with the market finding more pressure, JP Morgan looked weak. I went and got those 237.50s. Locked some of those in for 100%, held the rest as a hedge. And then Caterpillar. And I was talking about the relative strength in Caterpillar. Yesterday it was solidly green. The day before was green. And this is on the heels of it selling off since mid-January from 410. I'm like, one of these weeks is going to really start to take off. And maybe it's next week. But it was kind of hanging in there. I was able to lock some of my calls in for 100% after the open, over 100%. And then it dipped with the rest of the market. I'm like, let me just hold. You don't know if you're going to get swings the other way. And then sure enough, we get a reversal in the afternoon. It goes over 350, hits 351. Lock some more of the calls in. Just have a couple more left. We got 36 minutes to the close. I'll probably close those out shortly. But I mean, calls and puts have worked this week. Pretty remarkable. And then Broadcom. And, I was watching Broadcom this morning. I'm like, at some point, this is going to bounce, especially if the market has a reversal. So finally, once it started breaking into the 188s, I'm like, oh, here we go, 1230 or so. Got those 195s, locked some in for over 100%, locked some more in for over 300%. Now I'll just hold the rest. Again, similar to Cat, I'll probably lock them out soon, but I could see it really maybe takes off, especially if the market finds a last day surge. Maybe it trades to 196, 197. Also, if you take a look at the Broadcom chart, the 200-day moving average, I mean, don't get me wrong, you can probably pull up most charts in the market right now and look at the 200-day moving average and see that the stock is either around close or getting there. But uh, interesting, it held there. And also of note, I don't know if I posted this, but we're back over 50% of the stocks on the S&P trading over their 50-day moving average, 52% right now. So I don't know if it's a stick save and then we resume the downtrend next week. I mean, I think anything's on the table, especially with uncertainty. But at some point, you have to think, well, all right, so that's that. Also, some other names. So there was some strength, relative strength to some other names this morning. Some of the mega, I wouldn't even call them the mega cap, but those bio names I've been watching, Biogen, Regeneron. Uh, Biogen was up over like 4%. And you take a look at this week, monster move. It's like trading on a different market today. So I don't know if that's the start of bio starting to outperform. I'm kicking myself for missing calls yesterday and today, but definitely a name I'll be watching to next week. Same with Regeneron. And take a look at a weekly chart. So it's up 8% this week, and it's not like it's a small cap bio name. And then you take a look at Regeneron, similar. You take a look at the weekly chart, and I'm not, Regeneron was a $1,200 stock back, earlier in 2024. It's down here at $700. Doesn't mean it's going back to $1,200, but maybe there's an opportunity for upside on these names. So uh, that's kind of that on those names. iRobot reports earnings next week. It's that one's been a tough one. I could see trading over $10. The March 9s look interesting on a risk reward basis. April 10s, but again, I don't think any of that's going to matter if the market still comes under pressure next week. I'm trying to think of some of the other names. I think that's it, folks. Yeah, I think that's it. Let's have a great weekend, folks. I'll be back rock and roll.